Hello and welcome back to Explain the Charts. Today, we're taking a look at USDCHF and examining the recent market activity in light of the latest news. We'll be going over both the news and the chart data. Recent news indicates that the Swiss franc has been gaining strength due to risk aversion driven by U.S. recession fears and Trump's tariff threats, causing capital to flow into the CHF. We're seeing traders selling into rallies and anticipating further losses. According to Forex.com, bears are targeting Friday's low of 0.8477, with a break below potentially leading to a key support zone between 0.8400 and the December 2023 low of 0.8333. Resistance is noted at 0.8617. Let's jump into the charts and see what they reveal. We're starting with the one-day chart to get a broad overview of the price action. Looking at the one-day chart, we can see a clear downtrend developing. From December 2024 through the present, April 2025, there's been a steady decline. The initial price was around 0.88, and now it has plunged to the 0.85 range, indicating substantial selling pressure, with minor pumps in price followed by crashes. There was a peak in the 0.91 range during March 2025 before the big tumble on April 3, 2025 to the 0.85 range. This aligns with news suggesting that US dollar to Swiss franc carnage continues as bears eye 2023 lows. The bears seem to be in control, pushing the price down. Let's narrow in on a specific range of candles to see the very recent events. Focusing on the last few weeks, the steep drop on April 3 is particularly noticeable. This coincides with the accelerated decline mentioned in Action Forex's technical outlook. Currently, the price is around 0.85971. We need to watch if it breaks below the previous low of 0.8477, a break below which opens the door to the 0.8400 to 0.8333 support zone. This prediction seems somewhat likely given the current bearish momentum, however price needs to break that 0.8477 level. Now, let's switch to the 1-hour chart to get a more granular view. Let's analyze the short-term trend with an hourly view. On the 1-hour chart, we can see more detailed price fluctuations. There are a few attempts to rebound, but they get sold down. There's an effort to rise to 0.861 on April 7, 2025, but by the end of April 7, 2025 it tumbled back down again. This intraday volatility is consistent with the US dollar to Swiss franc stabilizes near 0.8600 after volatility, headline from FX Street. We will show all the candles, no time filter. Resistance seems to be solid around 0.86, reinforcing the selling pressure around 0.8550 mentioned in the Swiss franc forecast. Let's look at a more recent, smaller time frame. Zooming into the 15-minute chart, we get an even closer look. Price appears to be consolidating between 0.859 and 0.860. The RSI, as mentioned by City Index, is likely in oversold territory here, which could lead to a temporary bounce. However, the overall downtrend suggests that any bounce might be short-lived. Keep an eye on the 0.862 resistance. Key levels to watch include the immediate support around 0.8477, and if that breaks, then 0.8400 to 0.8333. On the upside, resistance is around 0.8617 and then potentially 0.8674. If the tariff situation with China escalates as indicated in the City Index article, expect further risk aversion and potential CHF strength. Be aware of any major news releases, though per David Scott, headline risk is potentially more important than data. Continue to monitor the RSI and MACD indicators for any changes in momentum. That's all for today's analysis on Explain the Charts. Remember to trade wisely and stay informed.